it dawned on me that the market is seasonal. Now, I live in Boise, Idaho, where there's distinctly four seasons. Springtime is spring, summer is summer, fall is fall. Right now, the fall temperature is around, somewhere around in the morning is about 40 degrees, gets chilly, and the past couple of days, the windows started to freeze up. And in the wintertime, like January, I have to prepare myself with a scraper so that I could scrape the ice off of my windshield. And it seems to me it's intriguing. It's intriguing how the world of the stock market is very, very seasonal. Um, so there is a thing called reversion trading. Reversion trading is when a stock moves in a one direction and reverts, and then before that reversion finalizes, I get in and ride out that reversion, and then exit to make a profit. Now, when the market is in a downtrend, it's good to buy puts and then place a inverted reversion. It's a seasonal, as just like the moving averages, certain stocks will move because one of the primary mechanisms of stocks moving is fund managers, funds will exit a particular stock. When that fund exits a particular stock, I'm t- these companies sell billions of dollars worth of stocks. They can't do that in one day. It takes them like weeks, and sometimes it might take a month or several months to exit a particular stock. When that happens, usually the market is in a process of decline, or and so that the fund can switch that account into some other account, some other stock. So when that happens, selling ensues every time there is a spike, which means that on a downtrending market or a bearish market, having identified that a particular market right now is essentially a bear market, it is good to buy puts, placing a inverted reversion trade. So that is a particular seasonality in the market. When the market is bullish, any pullbacks, buying the dip is a reversion trade that allows profit to be made when the stock recovers based on that drop. And I've noticed this. Now that essentially in a nutshell describes practically every trading scheme that is out there, essentially. Because either the stock is either in a trending mode or is in a reversion mode. And one of the things that I've noticed about a earnings is that it provides a periodic, a sequential basis on a long-term or short-term basis of a stock based on the new information that has been injected into for all the world to see to make the decisions on what to do with that stock. And that stock will move trending for a certain period of time. Within that period of time, if it takes a week or two, within that time, it could be either bearish or bullish. And when that happens, a trade can be made either in a reversion trade or a reversion trade based on the trend of that stock. And so there's even on a microscopic level within that particular company to have a seasonality to the stock. And so taking advantage of particular uh, seasonality, identifying what the season is, whether it's a trend season, whether the trend season is bearish or that trend season is bullish, identifying that and riding that particular seasonality, not all the way, but taking a bulk of that move is a prime example of essentially working with the house, essentially working with the house to maximize the profit in day trading. Whereas in the past, what I would do is I would take one setup and just apply it every day. That means that I am not in sync with the market. I am not in season with the market. It is like in January in Boise, Idaho, when it's minus 10 degrees and all the ground and the trees are frozen over, and I'm walking out with my shorts. And I'm walking around with my shorts and I'm wondering, hey, why is it so cold?